Futures are edging lower after the S&P 500 notched its first record close of the year Thursday afternoon. We're also seeing gold near record highs as the dollar is weakening, reacting to a seemingly less aggressive tariff stance from President Donald Trump, saying on Fox News Thursday night that tariffs are the one very big power that the U.S. has over China, and he would, quote, rather not have to use them here. We certainly have been watching markets try to get the he loves them not around tariffs, but we do know from previous administration, we do have that history to look back on exactly what type of targeting could come forward in the tariffs, what the negotiating power within that would look like, and then, additionally, what type of impact that would have for some of the U.S. companies that have the largest or outsized revenue exposure to China specifically, as we think about some of the tariffs that were enacted in the tit-for-tat trade war that did play out back then. And now much of the conversation around, okay, what other areas would be targeted here, and investors best trying to run the calculus around that.
Yeah, and we have certainly seen some of the smart money, and when you take a look at some of the top economists on the street just reassessing the risk here of these tariffs and what ultimately that is now maybe more realistically going to look like. Goldman Sachs was out with the note earlier this week saying that they now see only a 25% chance of a universal tariff this year. Now that was versus 40% previously, so a dramatic decline just in terms of that probability there from that team. They're also saying that they see a 70% odds of a roughly 20 percentage point tariff hike on imports from China versus 90% previously. So again, we are starting to see some of the top economists on the street right now, forecasters, scaling back their expectations of tariffs. And that has very much been reflected in the markets this week. Yes, we are getting a bit of a breather here this morning. We're not seeing too much movement ahead of the open for all three of the major averages. But I think overall, the markets have very much sighed a collective breath of relief here this week, just in terms of the fact that we did not see tariffs enacted on a day one of the Trump administration. That was one of the things that had been feared just a bit, just in terms of some of the uncertainty that is going to then further introduce into the market. But I think the road ahead still very much remains unclear. And we've talked to so many strategists here this week, so many economists who are saying that there's still much on the table. There's very much unknown on the table, and that is making the next several months a little tough to game out at this point.
Well, and think back to just what we heard yesterday from President Trump as he was video addressing the people who were in Davos, world leaders, elected officials, some of the corporate leaders as well, big banks that were represented and being able to ask questions, chiefly Brian Moynihan, as we were hearing in from exactly where the inclination is for these entities to also understand what type of tariffs may come forward here. And he ultimately was giving a sense that, hey, if you manufacture in the U.S. or if you bring more of that manufacturing power into the U.S. or make investments, then you'll be able to skirt some of the tariffs. But to the extent that we'll still see some of those tariffs come forward in other elements, and I mean, we're not even a full week into his presidency. So there's still a lot of time in order to really understand his assessment of where he would like to inflict not just economic power, but also try and get something back for what he would be implementing in the form of tariffs.
Yeah, we'll see whether or not the February 1st deadlines that have been now announced are likely here, whether or not that actually goes into effect just over a week from now.